Hello, everyone. The stock market might be quiet right now, but the story behind BigBear.ai Holdings, ticker symbol BBAI, is anything but calm. When trading wrapped up on Friday, October 24th, 2025, the stock closed at $7.06, marking a solid 4.12% gain from the previous day's close. On the surface, that may sound like a routine uptick, but if you take a closer look, you'll see this wasn't just any end-of-week rally. It was an explosive move that carried far more significance than the price chart alone could ever reveal. What truly caught traders' eyes was the enormous surge in trading volume. Nearly 293 million shares exchanged hands that day, almost 3 times the average daily volume of around 100 million. That's not the kind of activity you see from small-time retail traders or casual investors. When volume spikes to that level, it usually means something deeper is stirring beneath the surface. A mix of institutional interest, technical positioning, and possibly a powerful news catalyst fueling the fire. And yes, there was a tangible piece of good news driving part of that enthusiasm. BigBear.ai had announced that its biometric identification platform was being deployed at Chicago's O'Hare International Airport, a concrete and highly visible achievement for a company aiming to prove its real-world value in the artificial intelligence space. But even with that milestone, the scale of the trading action suggests something far more complex was happening, something that can't be explained by a single press release. Many investors who follow BBAI view it as a pure-play bet on defense and government-driven AI applications, a company positioned squarely in the crosshairs of two of the most rapidly expanding industries in the world: artificial intelligence and national security. Every time the company announces a contract with the Department of Defense or an expansion into major infrastructure like airports, bullish retail investors take it as validation that BBAI is on the cusp of breaking free from its speculative image and transforming into a mainstream AI powerhouse. But here's the reality check. The recent volatility in the stock isn't just about new contracts or business fundamentals. What's really driving this storm is an intense tug-of-war between short sellers and long investors, creating an ongoing battle that's distorting day-to-day price action. The story here isn't just about technology, it's about the psychology and mechanics of modern trading. The truth is, those impressive contract announcements often act as triggers, lighting a fuse under a powder keg of high short interest. That's when things get interesting. Because when short sellers rush to cover their positions, it can create massive upward momentum, sometimes even bigger than what new investors buying in could cause on their own. If you dig into the data, the picture becomes even clearer. As of the most recent reporting period, short interest stood near 18% of the total float, with over 76 million shares sold short. That's an exceptionally heavy bearish position, and it tells us that a huge portion of the market has been betting against this stock. But with daily trading volume running sky high, the days to cover ratio sits under 1 day, implying that shorts could theoretically close their positions quickly. The problem is, that number can be extremely misleading. When prices spike sharply, liquidity dries up, and what should be an orderly exit for short sellers becomes a frenzied short squeeze, with traders rushing to cover positions at any price, pushing the stock even higher. Another critical piece of this puzzle is the off-exchange short volume ratio, which has been hovering around 40% or more in recent days. This means that a large portion of the short selling isn't even happening on public exchanges. It's taking place in dark pools, private trading venues where big institutional players can hide large orders from public view. While that's legal, it makes the market feel opaque to everyday investors and fuels the perception that price discovery might be getting manipulated or at least suppressed. So when BigBear.ai's stock suddenly jumps on legitimate business news, these hidden short positions can become painful liabilities for the bearish traders. Their scramble to cover can trigger chain reactions, what's often described as panic buying from the bears, which in turn amplifies the stock's upward movement far beyond what normal buying could achieve. One key metric that's worth keeping an eye on here is the short borrow fee rate. Essentially, the interest cost traders must pay to borrow shares for shorting. Recently, that rate has been moderate, but if it suddenly spikes, that would signal renewed shorting pressure or a shortage of available shares to borrow, both of which can foreshadow another wave of volatility. For anyone actively tracking BBAI, it's important to use reliable data sources. Websites like FINRA, Fintel, or your brokerage's short interest statistics can provide the short data, borrow rates, and fail-to-deliver figures that often serve as early indicators of big moves to come. Now, let's shift from the technical side to the business fundamentals, because despite all the trading drama, BigBear.ai does have a tangible product story to tell. The company isn't just a generic AI play, it describes itself as a decision intelligence solutions provider. In other words, it helps both government and commercial clients make complex decisions through AI-driven analytics. Its technology has applications across defense, logistics, digital identity verification, and supply chain management, all areas with enormous long-term demand. The company's strength lies in its ability to operationalize machine learning and data analytics at scale, something critical to modern national security and infrastructure planning. However, that doesn't mean the road is smooth. Despite the strategic contracts and the expansion from its Panjiam acquisition, which added biometric and identity capabilities, BigBear.ai still struggles with profitability. Even though it beat expectations in its last earnings report, the company reported negative net income and a year-over-year decline in revenue. This is exactly what fuels the short sellers' thesis, that the company's valuation, which stretches into the billions, simply isn't supported by its current financial results. They argue that while BigBear.ai operates in exciting markets, it hasn't yet shown the kind of steady, profitable growth required to justify its elevated price-to-sales ratio. Institutional activity adds another fascinating layer to the story. On one side, you have massive passive investors like Vanguard and BlackRock holding sizable stakes. These positions often exist because of index funds, and those shares are frequently loaned out to short sellers, which paradoxically enables the bearish side of the trade. But on the other side, you see active hedge funds like Citadel Advisors and Renaissance Technologies increasing their exposure. That kind of activity usually means these firms are running sophisticated trading strategies, possibly involving both long and short positions designed to capitalize on volatility through the options market. And then comes the wild card, Goldman Sachs, which recently boosted its stake in BigBear.ai by a significant amount. That's not a move you can ignore. When a firm with that level of market intelligence allocates fresh capital into a volatile AI stock, it signals that the smart money may be preparing for a potential upside scenario. Looking forward, all eyes are on the upcoming earnings report scheduled for November 10th. That event could be the next major catalyst for the stock. Analysts and investors alike will be watching to see whether the company demonstrates real progress integrating its recent acquisitions and expanding its government and enterprise contracts. More importantly, investors want to see if BigBear.ai can chart a clearer path toward revenue acceleration and lower cash burn. A surprisingly strong earnings beat, especially with upbeat forward guidance, could easily ignite the next phase of the short squeeze narrative. Beyond financials, there's also a broader political dimension at play. Since BigBear.ai relies heavily on U.S. defense and intelligence contracts, any shifts in government spending priorities could directly impact the company's prospects. On the positive side, AI has become central to national security strategy, meaning companies like BBAI are increasingly viewed as mission-critical partners rather than optional suppliers. The risk, however, lies in execution. If BigBear.ai fails to translate its backlog of contracts into consistent high-margin revenue, the bearish thesis gains strength, and the stock could correct sharply. For investors looking to navigate the coming weeks, the key is to monitor the days-to-cover ratio, options open interest, and short borrow fee trends. If you see a sudden rise in out-of-the-money call options, it often hints at speculative bullish momentum, the kind of setup that can pressure shorts even further. Also, watch for any new short reports or bearish analyses. They can influence sentiment rapidly. In the end, BigBear.ai isn't just another meme stock, it's a volatile battleground where technical forces and real business developments collide. The right approach isn't to treat it as a get-rich-quick play, but to view it as a high-risk, high-reward growth company operating in a sector that's becoming more vital by the day. Its technology is already embedded in critical national infrastructure. If management can translate that strategic positioning into consistent profitability, the long-term payoff could be substantial. Until then, the stock remains a fascinating case study, not only in how AI companies are reshaping industries, but also in how modern market mechanics can turn a single piece of good news into a full-blown price war between bulls and bears. With earnings right around the corner, the next chapter of this tug-of-war is about to unfold, and whichever side wins could define the company's trajectory for years to come. This is not financial advice.